All right, back to work, back to work. Break time's over. Hope you guys had a fantastic Wednesday. But it's time to get back to work, right? Thursday is right around the corner. Want to make sure you guys know how to make some money on Thursday. Got a lot of good trades setting up here for tomorrow. And you know me, I'm going to cover all my favorite trades in tonight's video. That way you have a game plan, a roadmap to make some money on Thursday's trading session. As always, though, before we jump in and get this party started tonight, make sure you subscribe to our YouTube channel. I publish all the good stuff right here on this video. I don't want you to miss tomorrow night's video, so make sure you subscribe. And as always, if you guys enjoy the content, you know what to do. Hit that like button for me. Appreciate you guys supporting this YouTube channel and tuning in tonight. But enough of the intro, right? Let's get ready for Thursday. Where's the best trade setting up for Thursday? Well, you'll notice there's a lot of ranges on these charts right now. It definitely feels like a summertime season. The month of July, the month of August, we oftentimes do see a lot of ranges. You know me, I love ranges. I love ranges. Range on the Nasdaq, range on the S&P, range, of course, on the crude oil. Ranges are great. We can trade some breakouts tomorrow. We can trade failed breakouts tomorrow. One of my favorite trades are those failed breakouts. So we've got breakouts setting up right now on the Nasdaq, breakouts setting up on the S&P, and breakouts setting up here on the crude oil as well. But I would love to grab some failures. I would love some reversals back into those ranges here as well. So there is no shortage of reliable, potentially profitable trades setting up here for us on Thursday. Before we jump in, though, into each individual chart and cover all the trades for tomorrow, though, speaking of Thursday, let's make sure we're all on the same page here for tomorrow, because there is more major news tomorrow. Now, I know we don't normally care too much about the jobless claims on Thursday morning, but I would definitely pay attention. The ADP employment number tomorrow and the jobless claims report at 8:30 Eastern time. We talked about this last night on the video last night. We know we have that employment number coming on Friday. And the big deal right now is the Fed, right? The FOMC has basically said, well, it's not a recession. It can't be a recession. I know markets are coming down. Demand is coming down, right? Inflation is out of control. But the Fed has told us time and time again, well, we can't have a recession if we have a real strong labor market, right? There's, today we heard from the JOLTS report, there are 2 job openings for every one person, right? Every one person. So there's tons of jobs, but not enough people to fill those jobs. We're going to find out tomorrow, and again, right ahead of Friday's report here, how good are they expecting that employment number on Friday, right? How many jobless claims, right, will that spike? So I'll tell you, we don't normally care too much about these numbers on Thursday morning, right? We just don't. But in the situation we're in right now where markets will be watching, traders will be watching these numbers tomorrow. Will we see a surprise drop in the ADP? Will we see a surprise spike in the jobless claims? I would imagine those have potential to really impact the market sentiment going into the bulk of the trading session tomorrow morning. So definitely don't be late. I know we don't usually care about those, but this situation leading into Friday's non-farm payroll number and how much the Fed has kind of leaned on this jobs market is definitely something we're watching for closely here going into tomorrow morning. Later on in the session, don't forget Monday was a holiday, and so Wednesday's inventory report gets pushed back to Thursday at 11 o'clock. Be aware of that if you're an oil trader like we are tomorrow or every morning in our trade room. That 11 o'clock, top of the hour, petroleum status report. That is potential to be a major market mover on the oil futures. So those are the 3 events you want to be aware of tomorrow: ADP, jobless claims, and of course the weekly inventory report on crude oil. Don't forget, we are not trading the news. We wait for the news to come out. We let the market tell us what it thinks of the news, and we trade the reaction to that news, right? Very difficult to make money consistently by simply trading the news events. Give it a few minutes, wait for the reaction, and we'll go from there. And of course, tomorrow, right, we'll trade it all together in the trade room, right? 8 o'clock Eastern time, we open things up in the front row seat for that ADP employment report. Back to our charts, though, here, shall we? Where are the best trades for tomorrow? Well, I'm going to cover each of my favorite trades on each of these markets here tonight. Whether you trade one of these markets or you trade all of them like we do each day in our trade room, you're going to learn something new throughout the entire video here. I'll provide different trade ideas, different setup variations, different advanced tactics as we go deeper into this video tonight. So I'll give you a reason to stick around all the way to the end, right? So make sure you get comfortable, grab some notes, take some screenshots, and get ready here for a good lesson here tonight. Let's jump in first to NASDAQ. Here we go, NASDAQ, Emini, and then crude oil. Let's jump right in here to the NQ, right? A lot of my students right now are not only trading the NQ, but the micro NASDAQ, the QQQs, right? The ETF counterpart. So this analysis can definitely be applied to the E-mini, the NASDAQ, the micros, or any of the ETF counterparts. There are three basic, kind of three key components to this chart right now that are kind of giving me the roadmap to where the best trades will be here for tomorrow. The first one's a trading range, right? The trading range is a big deal because ranges act like magnets, right? Ranges act like magnets and they love to rotate. So the market will go up and then down, then up and then down and up and down, potentially up and potentially all the way back down again into that range. And you'll notice I've measured the amount above the range to project that down below the range for potentially, if the market was to reverse tomorrow, we have a pretty good idea of where the market wants to go. Puts right on that 11,624 area, which is conveniently right around last week's closing price. Let's get rid of that area just for now, and we'll keep it simple. The second big clue gives the bulls a lot of control of this market, a strong bull breakout. Anytime we see a strong move in one direction, we expect to see what? A retest of that high in this case. Now, at that point, do we stall at that high and end up back into that range? Double top reversal. Do we break through that high, take out that 12,000 and end up probably in that runaway zone, 12,100, 12,143, right? So at that point here, we're waiting to see what happens here now, but we know we have that strong move up, expecting a retest, and then from there, do we continue through it, or do we break off that high, right, and back down into that trading range? That strong bull breakout is a very, very important part of this because it tells me if I'm trying to sell back into that trading range, I need to be very careful, right? Because that strength is a really, really, well, in my trade room, I always tell my students, don't fight the direction of those really big, strong moves there. A very, very important clue here for the buyers. And then, of course, the next thing is this major area of resistance up overhead. And you'll notice these will be slightly different on the S&P and the NASDAQ, but it's the same basic idea here. We've had this 11,970 level on this chart pretty much all week here this week. It's basically a big prior low that's acting as a level of resistance. You'll notice if we can get above that 11,970, we then go right up into that trading range we had towards the end of the month of June, right? That was that big spike up we saw last week in June. So if I look back on this now, if we can crack and stay above that 970, again, that 970 is a big deal here because we already know we have a range below us, but we know above that area, right? Above that area, we have a lot of open space as we go higher here. There's a big range up there. Again, that 12,100, 1280 area, this area up here, seems to be a pretty good objective here if the buyers can, first of all, if they can hold this move and keep it going through. So once we know all of these details right now, knowing these kind of, three main components, how do we make some money on this, right? Where are the best opportunities for us, both long side or the short side? Well, it all really begins the long side right now. The long side has control of momentum. It was a bullish market going into today. It was a bullish market pretty much all day here today. How do I buy this thing going back up to retest the high? We know that's very likely here. Here are a couple ways I'm looking to buy this. Now, I'll be very honest. If this happened at 10:30 this morning, I would look for a straight up failure pattern here. Wait for those bears to come in, try to get short, and I would try to use their stop losses, right? Their stops as fuel. So if this situation happened during the kind of normal trading hours, during the regular market day, we see a strong pop up. I draw my channel off the high. I find that hidden channel off the low. We get underneath the 21 moving average. We trap in those bears, and we can use their stops for retest of that high. That is in normal regular market hours. That is the best way to do this. But we are not in normal market hours right now. We are just barely opening up in Asia. So the big challenge is it's a little bit slower overnight, a little bit less reliability, consistency overnight. So the best way to buy this right now, if you're watching this and coming out of Asia, is you need to, well, again, we have that range below us and we're at a major area of resistance. So we need some sort of catalyst, something that's going to give me a little bit more of an edge on that long trade right now. And to do that, we'll try to rope in some more of those bears. I want to use the 2-try failure pattern, and I want to trap. This will be the best way, really the safest way at this point, to buy this thing going back up to retest that high, right? That's how I want to buy this right now. Now, this entry may not happen right here, right? It may pull back. It may go a little bit higher up there. But what you want to do is you want to try to use those trap setups I teach in my free trading course to trap in those bears, and then basically use those stop losses as fuel as we go higher. Again, this would not be necessary if it wasn't so late in the day, right? Pretty much in the middle of the overnight session right now. That is a great setup as we go. And then remember, do we go higher from there, or do we end up rolling over for that reversal? I really like that reversal a lot. We'll talk about that a little bit later on in this video tonight. How do we try to break out? Right? What would some breakouts look like? So we take the bears once, the bears twice, grab that trap, and we're going higher here now. What would be some breakout patterns going higher? Okay, these are some easy breakouts to keep in mind for tomorrow. One would be a 2-try trap. Right? Let's say this thing, let's say we go lower, right? Bears once and we blast, right? Real strong move going higher here. When that happens, remember, we know now if we can get above these highs up here, it's all gravy up to that ranged magnet. Watch for that strong move, a shallow pullback, a higher high in price, and a trap entry. One of my favorite breakout patterns is called a 2-try breakout or a 2-try trap. Again, strong move, shallow pullback, higher high in price, and then grab that trap. Okay, we talk a lot about traps, by the way, in that free trading course on the website, right? I mentioned it earlier, which, by the way, if you're here for the first time right now, I know a lot of you guys and gals have taken the free trading course. You've learned all about failures and traps and how we use the opposite side of the market and their stop losses to give us that edge, right, to get some great results in the market. But hey, if you're here for the first time, if you haven't taken that free trading course and learned the actual entry tactics we use in our trade room, what I'll do is I'll put a little button up here for you in the upper right-hand corner. Grab that link, take the free trading course, learn the roadmap. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or maybe you just want to kind of level up your game in the summertime season right now, the roadmap that I teach in that free trading course is perfect for a new trader, especially anybody who's trying to transition from full-time 9-to-5 job into full-time trading. That free trading course will get you right on the right track. That way, the next time I say, like this one, for example, a second breakout pattern would be a pop and grind, right? The same technique I'm using here to find that channel can also be used here. If we pop up and now we kind of grind and go higher, very, very common in a summertime season like this, we can draw a trend line off that high, a trend line off that big low. We can look left, find prior swings, and look for that trap. Get underneath the prior swing. Get underneath the moving average. Get bears coming in, trying to sell short, and I can buy into those stop losses, right? Stops get run, pullbacks get bought. This is one of my favorite breakaway patterns, breakout patterns. Again, we expect them to want to retest the high. Do they keep on grinding as we go higher? Mark up that trend off the highs there. Find that trap. Grab that failure. Grab that pullback. And again, what was that runaway target up there? Yeah, 12,100, 12,143. That's where you're thinking this market wants to go here for tomorrow. One more breakout going higher would be a retest of that high. Right? Retest the high. We pull back now to the 21 moving average. All these moving averages will be 21s here tonight. And of course, we're going to pull back and we'll blast right off that moving average. We call these 1, 2, 3 breakout patterns. I'm going to mark a trend line off that high. I'm going to bring it down, find that channel. And you know me, I love traps, right? I always look left, find some prior swings, try to get underneath those prior swings. That will also put us in underneath the moving average. I can look for that failure and that pullback combination from there, right? And you'll learn more about traps and failures and pullback combinations. You'll learn that. I have hundreds of examples of how we apply those setup techniques to our favorite markets. It's all included, of course, right, inside of that free trading course. So now you know how to trade it here as it's going back up to retest the high, and then 3 different breakout patterns as we go higher here. The next big question is, how do we short this thing? Right? How do we sell it, right? Can I sell that double top? Hell yeah, absolutely. What if we go lower here? Can I sell it then? Yes, indeed. Absolutely. Let's keep going on this. The NASDAQ, we know the game plan here. Let's go look at the S&P. The S&P is almost identical here to the NASDAQ here. And again, when I say the S&P, you could also apply this analysis to the SPY, the SPY, the ES, the MES, right? Pretty much anything works here. I like trading futures because futures are really built for short-term trading. All right, guys, on the S&P, there are 3 basically the same basic clues here on the E-mini. The first big clue is this trading range. Right? Why is that important? Because we know that if those buyers can't hold this, we're going to end up going back into that range, and probably not just back into the range. We're going to probably want to rotate, because that's how ranges work, right? The amount we go above the range, we go below the range. You'll notice the rotation is very symmetrical, right? Back and forth, back and forth. So if we do kind of fall out of the sky here, we know the market not only wants to go back into that range, but it wants to go all the way back, right, and take out that 3786 area, which, by the way, is also another range down below us. As I mentioned earlier, got a lot of ranges here on this chart right now. What's my second clue? Second clue, same thing, right? Same thing. Got a real strong breakout, right? That's a strong move right there. Anytime we see a strong move, what do we expect? We expect a retest of that high, possibly another leg higher with a breakout higher, or possibly here a reversal going back down again. That is that strong bull breakout. I would say that is the most important clue on this chart, because it really makes us pay attention to the buy side. Right? That strong bull breakout basically forces us to respect the buyers. Whereas if we didn't have that, I'd be looking a lot more seriously at the short, right? Back down into that trading range. Next and third clue, again, is a little bit different than the NASDAQ, but it's the same basic idea. We're sitting at resistance. Now, in this case, it's a little bit of a hidden area of resistance. We had this level, of course, on there last night, and we did get a nice 1, 2, 3 breakout. But look where they're pulling back right now. Look where they're pulling back. They're underneath that level. Wouldn't you have thought, come on, if the buyers were really that strong, wouldn't they have gone up and held above it? You know what I mean? If the buyers were really that strong, wouldn't they have held above that high? They would have. Now again, this does not mean we can't buy this. It's still very bullish here right now. But that to me has the same kind of effect as the NASDAQ has, where the NASDAQ actually has that level right there. Right? So the NASDAQ has a little more obvious level. The S&P maybe not that obvious, but I think it still has the same basic effect here on this chart, right? If this was really a bullish market right now, it would have broken, it would have held, and we would have basically closed here above that high in my eyes, and we didn't. Again, I don't think that's enough to say we can't buy this. It isn't enough to say we should sell it, but it's definitely a very big clue, and it leaves the door open for these buyers to struggle and fail. Now, we've covered a lot about this already here on the Nasdaq, right? We talked about how I can use a 2-try trap because, hey, if we really are at resistance, if the sellers really do want to go back into that range right now, show me the proof, right? Show me the proof. Prove to me, try a couple times, because if you fail, I know exactly where your stops are, right? I know exactly where your pain is. I know exactly where you want to go too, because you already gave me that strong run up. So if the bears if they struggle a couple times here, right? That's why I said, again, if this would have happened at 10:15 this morning, this would be it'd be a lot easier to be aggressive on this. But because we're changing from one day to the next, overnight session, it's just not as consistent. It's just the way it works, especially in the summertime season when, half the traders are still coming off the beach right now. So we know that 2-try trap and that run higher. We talked about those 3 breakout patterns. Right? Remember what they were again? It was that 2-try trap, strong move, shallow pullback, higher high, right? It's that pop and that grind. One of my favorites at this point in my career. Love those pop and grinds, right? Same thing. And then again, that 1-2 blast, right? Get up, take out that high, jump off that moving average, right? Then mark up that high, mark up that low. Same 3 breakout patterns that we talked about there before on the NASDAQ. And again, very similar. We get a range above us. I've got my eyes on that, 39.13 to 39.25, give or take, right? That area for tomorrow. If these buyers, again, can get through this high here. Now, let's cut to the chase. How do we sell this sucker? Right? What's the best way to sell this thing? There are 2 ways right now we can sell this market. One of them will be if we end up bleeding lower. Okay, that's one easy giveaway. The other would be that double top reversal, which in all reality might be the best trade we get tomorrow in all reality. So how do we trade that double top reversal? Well, first of all, who has control momentum? The buyers do, right? So we're going to run right into an area of resistance possibly. Now, at this point, the strong hands, right? The smart money always buys low, right? I think by definition we can all agree that smart money buys low. You want to buy low, you want to sell high. So when I go back up to retest this high right now, what do we always say? We always say mission accomplished. Why? Because, again, anytime we have a strong move in one direction, we know the objective now is to retest the high. So once those buyers accomplish that objective, right, once they mission accomplish there, now let's look and see if we can trap in some of the weak hands. Right? These are the traders who don't know any better. They use small stops. They use small position sizes. They can't buy into it more if it goes against them. They can't defend themselves, right? These are retail traders, but the newest of the retail traders in the marketplace. They come in, right? They're seeing this thing going higher. They come in, they try to buy it once. They try to buy it twice. Remember, it's very bullish right now. It isn't a bear market. I know the range is a very easy target for us here, but we're not a bull market. We're not a bear market. We're a bull market. So we have to really, again, like I said earlier, we have to find some other catalyst. Right? If I'm going against momentum on this, momentum helps my trade. In this case, momentum hurts my trade. So I need something to overcome that kind of negative momentum, I guess you would say. And to do that, we need stops, right? Stops are where the easiest target's going to be, where the easiest money is to be made. The fastest money you'll ever make in trading is when you're getting short, for example, and the buyers have tried a couple times and all their stops are sitting right below that low. Right? At that point now, once those buyers have tried twice, we know the aggressive traders are in, we know the more patient traders are in, and now we can look for that nice juicy signal and we can sell that short back down again. Now at this point, your job is just getting good now. Right? We get that short off the high, that 2-try failure. In context, it's called a double top reversal, right? Pretty simple idea. Strong move up, they retest the high, buyers try a couple times, and we're selling into those stop losses. Now, once we begin to roll over, Now we know where the market wants to go, right? It wants to go back into that range. It wants to take out some of these lows. It wants to hit that pendulum swing, right? I mentioned earlier. How do we do it though? We mark a new channel up. We mark off that low. We mark off that high. We look left. I always tell my students in trade room, remember, we get together every day and we trade this stuff together in our trade room, 8 o'clock Eastern time. And one of the things I always point out in our trade room is once the market rolls over, then we start, okay, let's get that new channel on. Let's find those prior swings. Oh, obviously, there could be more than one prior swing here. But the goal is to get back to the high of that channel and to draw that channel in a way that will get me above the moving average. Okay, that's the secret. The secret is to draw that channel almost flat enough so that when we pull back to the top of that channel, we're above that moving average. What that does is it confuses buyers into thinking, oh shoot, and we're going back up again. And again, inexperienced traders will come in, they'll buy that pullback, and bam, we get them right where we want them, right there, right? That little sequence, this is one of my favorite sequences for ranges and reversals, right? Again, we're not trying to pick a top. We're waiting for the buyers to dig their own grave. And then we're going to use those stop loss, that short off the high. And then once it rolls over, then we hit it. Trap pattern, failure pattern, pullback pattern, right? Off the moving average. Again, you'll see a lot of examples of those. You'll learn the ropes of those inside that free trading course. And then remember, the range, of course, right? The other side of that range, 38.24, is an easy target at that point. And then leave that runner, see how far it'll go on the opposite side of the market. So now we've talked about how to sell it on that double top. Okay, how do I sell it as it goes lower? Okay, there are basically two basic setups you want to think about as the market goes lower. Okay, here's two of them to watch for. One of them, the easy one is a two-try trap. Let's say, for example, the bears come in, right? They push it lower, and then now all the bears will come in and try to short that trap. Okay, it's a pretty simple idea, right? So if they hold that pullback and move lower, now we've got kind of that same, remember that one earlier? Strong move, shallow pullback, higher high. Remember that pattern earlier? Same idea, right? Strong move, shallow pullback, lower low. There's that trap. Okay, that's a good setup for short. Not my favorite of the two. This one will be a little bit more reliable, a little bit easier, is a pop and grind. Let's say, for example, now we open up in Asia and the market starts to grind down and make that move lower. Now it's pretty easy. Now we can draw that trend line off that low. We can bring it up around that high. And again, I draw it nice and tight off those lows, bring it up around that major high. Okay, the reason why I put it up around the major high like that is because, again, when we pull back to the high of that channel, I want to be well above that moving average. Okay, that way I have a lot of choices. I can take a trap above that prior swing. I can wait for buyers to come in and try to buy that pullback, right? Once they do, their stops are a sit and duck, and then I can go in and I can grab that first pullback off the moving average. Now, here's a really interesting way to look at this. The first leg, right? That first leg will almost guaranteed be its same size as that final leg, right? 1, 2, 3 legs. Most trends will go 3 legs. Every once in a while, we see 4, maybe even 5 on a real strong trend. The first leg and the third leg, okay, now obviously there is exceptions to every rule every once in a while, but the vast majority of the time, that first leg and third leg are going to be where your best targets are. So take that first leg off the high, project that down to that third leg, and that'll help you kind of fine tune, right? It'll help you fine tune here, kind of where that exit target will be as we go lower, right? Does that make sense, right? So now we've covered a couple more shorts, right, as we go lower here, right? We talk about that double top reversal off the high. If they do make that lower low in price, think about those traps. That is definitely the more aggressive way to do it. At that point, we haven't exactly turned bearish yet, right? We still kind of have a little bit more of that bullish still left over there. That, again, is a good setup. The one that really is almost bulletproof, though, would be if it rolls over and begins to grind down, right? We get that grinder there. Love those types of channels. Or don't forget, too, we pop up, we blast, right, off that moving average, find that new channel off that low, bring it up around that high, right? We call these 1, 2, 3 reversals, right? 1, 2, 3. The key, though, is that because we have that big pop up, right? Because we have that strong pop up, we have to really be careful and let the bears have to take back control. They have to jump off that moving average, right? Or grind down. The grind is an easy giveaway as well. So keep that on your radar as we make that rotation back down to potentially that 37.90 area. In the meantime, remember, we're a bull market right now. Right, we're a bull market, but now we get a really good game plan to make some money on the breakouts going higher, make some money on the reversals going lower. As you can see, as long as you, as I'm doing, plan your trades, you'll have the game plan ready to trade your plan when you see that stuff set up. Right, that's why I put the effort in here every evening on this video, so I can make sure not only am I ready for tomorrow, but I can help coach all of my students tomorrow to make sure they're ready to capitalize on the moves we're outlining here tonight. All right, last but not least here, over on the crude oil, oil obviously is still kind of weighing down here the threat of recession, of course, lingering. And it's, as you can see here, thank goodness, right? Finally bringing the price of oil down here. But let's see here. That may not last very long. The way this chart's looking right now, we might be looking to go back to that 100 level here sooner rather than later. Now, there are three basic components here to my roadmap for tomorrow. One of them, the first one, is probably not the, well, let's talk about this. You can decide which one's the most important to you. It's a bearish market to a trading range. So first things first, we began the day chopping around 100, right? That 100 big round number. Ever since I've been a trader, $100 a barrel on crude oil is the granddaddy or grandmama, right, of all big round numbers, right? It is the round number, right? So that is a huge psychological level, as you can imagine, right? First of all. Now, you'll notice from there, we get a pretty good breakout, right? Nice strong 1, 2, 3 move going lower, and we pretty much go right into another range. Now, in my world, the newest range, the most recent range, is the range you want to pay attention to. In most cases, right? Again, there's always going to be some exception. There's always going to be some black swan event, some outlier that will make this break that rule down. But 95% of the time, when you have a day that begins with one range, you break out into another range, that second range or the most recent range is the one that really is the most important range. Okay, so we have to think now, right now, we're bearish and we go into that trading range. Now, I should also point out too, and this is kind of an intangible, this could be a fourth kind of clue here on this. We know that oil, well, if you're like me and you watch oil every day, you know that oil lately has been making $5 moves. Yesterday, it was a $14 move, right? But oil loves to make $5 moves. Went from 100, but we couldn't quite get to 95. Does that seem a little bit odd to you? It does to me. It seems like something may have kind of caused this market to stall out there. Maybe it was a measured move, right? By the way, anytime we see a trading range, the breakout leg is the measuring leg. Okay, that's why I found those measured move targets on the S&P and the Nasdaq. That breakout leg is the measuring leg. So it might have been that measured move. It's tough to tell exactly why. The way that this oil market's been moving lately, though, you wouldn't think a measured move like that would have stopped it. You know, oil's been pretty dramatic lately here, and that seems to be like a little gray, a little red flag as far as I'm concerned. So bottom line is, the big clue right now is that trading range is a huge magnet, right? And really, for the most part, it should be respected. It should be respected until we see the second clue. The second clue, of course, is the pop and grind breakout. You'll notice here, right here is exactly what a breakout looks like. It's a pop-up, a pullback, and a blast, a jump off the moving average, okay? Like this one, breakout, pullback, blast, right? Those are breakouts. Okay, this is that same 1, 2, 3 breakout that I've talked about quite a few times already on this video tonight and last night. So that is that 1, 2, 3 breakout pattern going higher. You'll notice though, it pops up into a grinder. Grinders are such big clues because they usually tell us we're going, well, in this case, we're going higher. Pop and grind channels are really, really common. Anytime we see a market make a big move down and then pop up and begin to grind back up again, That usually means the bears that would normally be selling this back down to that range are no longer here anymore, right? The bears are getting out. That's usually what causes that fluttering price action. So that really turns this whole thing on its head, really. And now, knowing that, yes, we have a range down below us, and yes, we want to respect that, but not so fast, though. These buyers are looking very much or maybe not in control just yet, but it looks they're knocking on the door to take this thing back up to the third clue, which is that initial trading range, and that, again, the granddaddy of all big round numbers up overhead. So as you can see right now, the buyers have a lot of options right now. They can buy that trap below the low of this channel. That is exactly what we look for when it comes to a pop and grind channel. You know, again, if this is at 10:15 tomorrow morning, be great. It's a little bit tough being so late at night right now, but that's a great spot for buyers. Or let's say we do go back down to retest the low. Buyers can also buy the failure off that low with that same, in this case, a double bottom failure, the same thing we talked about for the short on the S&P and the Nasdaq. So there's plenty of ways these buyers, right, can do this. And of course, the market goes higher here, a potential breakout going higher as well. What can the sellers do right now? I'll tell you, the sellers have a very hard time right now because, first of all, trend line coming up, right? We have to literally, just like on the S&P and the Nasdaq, we have to almost get this thing to break down here and then start thinking about that short, right? Once we get the proof of that reversal. You know what I'm saying? Because I can't sell right now. You can't sell with price action like this. That grindy price action is just too easy of a giveaway. So how do we buy it? How do we sell it? How do we make some money on this oil tomorrow ahead of that report at 11 o'clock Eastern time? Again, a trap, right? Traps are fantastic setups in this situation, right? Get that strong pop, that shallow pullback, that higher high. There is your trap right below that low. Also, too, the 21 moving average comes over. Can I get some bears coming in and trying to sell back down again? Hopefully they do. A trap turns into a stop run for a failure setup. And then, of course, as we go higher here now, we know where the market wants to go. That's an easy giveaway. Now we grab that first pullback off the moving average for that run going higher, right? Trap below the low is the best one. The failure is the safest one because it waits for those bears to commit. And then, of course, the pullback, right? That's the last one. That's the cherry on top as we go higher here, right? Now, speaking of which, what if we do go higher, right? What if we keep on grinding? What if we keep on grinding higher here? What do we do then? We do nothing, really. We wait again. We wait for that trap. We wait for that failure off the moving average. We run those stops and grab that first pullback off the moving average, right? Same basic idea, right? Same basic idea. If the market pops, though, right? Let's say, for example, it really pops, right, and really jams and runs higher. Take that new channel out, mark that high, mark that low, and grab that first pullback, right? So if it really pops and runs here, think about finding that new channel, right? Get rid of this old channel here. This won't be necessary anymore, right? Get rid of that one. Find that new channel off those highs, bring it down off that low. Think about those traps. Remember, traps are the easiest money you're going to make because you're trapping in the bears, in this case, on the opposite side of that market. This could be a trap. It could be a failure. It could be a pullback setup, right? Or, again, too, strong move up, shallow pullback, higher high in price. I know it's scary because you're around that 100, but remember, anytime we see a strong move like this, the odds are very good we're going to retest that high, right? So grab that trap, get that retest, hold that runner, right? Get some major levels up there at 102, right? 31, right? That's how we trade it as it goes higher here. Okay, as it goes lower. And again, you'll notice as it goes higher, I am not trying to sell this thing. It's too bullish at that point. The range is too strong of a magnet. Now, as we go lower here, what you want to think about here is the short side and the long side. So as we go lower, if it does start to melt down like this, right? Just we talked about on the S&P, mark that low, mark that high, get up above, right? Grab that trap, grab that failure, and dump it back down again. Okay, that's the setup. I like that trade the best on the short side. Okay, also too could easily be a move lower, right? Strong move down, shallow pullback, lower low in price. That trap works as well. Okay, and obviously too at that point, if you can find a channel off that low, off that high, definitely even better, right? Even better. So I like that short a lot. Again, it makes sense. There's a range below us. So it should hold, right? It should want to go back to that area. But again, that poppy, grindy price action it's just too obvious of a clue. Be very careful selling this market unless we can get one of these short setups. All right. And again, we know where the bears want to go. They want to go back to that low, 95.78, and ideally that 95, right? 95 is definitely kind of the ideal objective as we go. And then what if we end up all the way back down at that low here again? What's the game plan then? It's that same two-try failure because, again, what is momentum direction right now, right? Who has control momentum? The bears do at that point. I understand we're at support. I understand we've kind of accomplished the mission, right? I get all that. But we can't just buy at a support level because we think the market might bounce. You're more than welcome to do that, but I'll tell you right now, you will die a death of 1,000 cuts by trying to constantly buy support levels in a bear market, especially a market like oil, which is being dragged lower by recessionary fears pretty much across the board right now. So we don't have momentum on our side here. We need to get something that gives us that catalyst, and that something is those bears. Right, we get trapped in those bears. Let them try twice. Right, notice how I draw this. It's a higher high. Right, higher high. We go down. The bears try once. The bears try twice, and we're buying it back up. Right, higher highs. Why? Because sellers want to sell high, just like buyers want to buy low. So we have to assume that as the market goes higher, fresh sellers are coming in. New money is coming into the market. New blood comes into the market. Once those bears try twice, now we know exactly where their stops are. And we know everybody's trapped at a level of support with a range below us or a range above us here. And now we can let this thing rip with a failure pattern. Right? I always try to convince people or encourage folks, draw trend lines, look for traps below this low. You'll see a lot of those kind of advanced tactics inside that free trading course I mentioned linked up above there, right? But again, one try, two try. There's a bunch of different ways you can take this trade off the trend line, off a trap level, buying the stops. You'll learn that stuff inside that video course. But then as we go higher, remember, at this point now, where does the market want to go now? It wants to go back and take out those highs. The markets are always rotating from one extreme to the next. So if I can get this reversal off that low, if I can get that two-try failure off that low, then what I can do is mark up that new channel high, find that channel low, drill down, and find the entries on the entry time frame. This is not our entry time frame. You'll learn more about that in that free trading class. But find that first pullback off that channel. This should be a pretty good trade because at this point now, all the bears are caught, and it should go pretty easily back up to reach that what appears to be around that 99 level up overhead. So keep your eyes on, again, there is no shortage of ways to make money on these markets tomorrow. So keep your eyes on that. And remember, too, tomorrow, 11 o'clock, right? So time is definitely of the essence tomorrow morning if you're an oil trader like we are in our trade room. All right, guys, good job tonight. Game plan is all set. Now, let's go trade that plan tomorrow. The trade room opens up 8 o'clock Eastern time. If you're looking for a great place to learn and trade along, if you're missing too many good trades or you're taking too many losses, making too many mental mistakes, my trade room was built for you. It's meant for you. I have all the worksheets to make following along easy, all the software templates. All I need is you. I'll put all the links, right? All the free course links. The start with a free class, the free trading class, a great place to begin, learn the basics, get working on that, and then you'll be ready to come join me every morning in the trade room as an advanced member. I'll put all the membership links, all the free course links down, the description of the YouTube video. Don't be afraid to use that live chat. Don't be afraid to call the office. I know I go pretty quickly on these videos, but I would gladly slow things down, answer all your questions, make sure you know the best broker, the right charts to use, that way you're ready for trading with us here later on in the month of July. All right, guys, hope you learned a lot in tonight's video. I apologize for the late upload. It was a busy day today here in the office here in Los Angeles, but hope you guys enjoyed it. Hope you use this to make some money on Thursday. And don't forget, tomorrow morning, the good stuff is in our trade room, 8 o'clock Eastern time. I'll see you guys there. If not, we'll come back tomorrow night and we'll do it all again. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.